Different show today. Didn't have as free a morning as I had expected, but we are going to go over some of the market news that we had in the last 24 hours. And I am going to speak a little bit on what I think the markets are going to do. Obviously, we've had some bit of fluctuation in the top majors, and it does seem that with earnings coming out for some pretty big tech stocks in the risk sector, that we are going to have some sort of pullback. We'll talk a little bit about that. And then we'll just go over some news, and I'm also going to talk a little bit more on Bitcoin and Blast, two areas that I think your attention should be. And if you have questions, feel free to throw them in the chat as you watch this live. Happy to discuss anything people have want to have a conversation on. But yeah, good morning, happy Tuesday. It's gonna be a fun week. Gonna be a very fun week. Jumping into just current overview of the market. And let's actually pull up the market instead of the ETF numbers. Let's look real quick. I want a really understanding of why we are seeing a lot of red in the market this morning, which is mainly a lot of people are taking risk off. We are seeing stocks get slammed this morning. I think the big thing to watch this week is tomorrow. We do have NVIDIA earnings, and I think that will be pretty telling of what's to come. But I do think that this is needed. We've been on a pretty solid run up. We've been seeing a lot of gains, Ethereum outperforming, and we're probably going to see a solid consolidation here, which is needed as you go up each level. You do need these pullbacks to essentially allow for levels to be built, and for basically to make sure that we are not having too much open interest as well. I think notably here within the market of everything, again, Bitcoin, Ethereum performing well and are going to be the major areas to look at. Most notably on the alt side, Pixel launching, running all the way up to $2.5 billion market cap. That is going to be something to watch very closely. It's kind of setting the stage for what is going to happen within the gaming market on altcoins. And it does explain that even though we are early in the market, okay, there are many opportunities for you to get out there and engage early at platforms and make lots of money as tokens launch off of an airdrop allocation. We've also seen some very interesting things happening. I know StarkNet, all the way up to, I'm not sure where we are up to right now on StarkNet. I think it's something crazy like a $22.6 billion FDV. This performing pretty crazy. A lot of people were asking why it's stayed so high. And that just being there's not a lot of sellers. In 2 months, as things start to unlock, we will start to see more selling. Looking a little bit closer at what we have going on the token side, just pull up the charts. We do have, as I said, stocks getting hit a little bit this morning, but on the crypto side, pullbacks off of highs. We did have Ethereum cross over $3,000, and Bitcoin also pulling back a bit this morning, just about 1.5%. Solana also having a bit of a pullback greater. We've seen this as well. Other alts getting hit hard. We did see Blur, which was all the way up into 80s, have a major pullback. We're starting to enter that opportunistic buying zone, so keep that on your radar, as others are as well. Coinbase getting absolutely slammed, kind of in the worst spot, being in both worst places, being crypto and risk sector and a technology company, pulling all the way back from its earnings run up to the 190 mark, its last peak, pulling all the way back to its earnings day call of 165. Again, there's going to be opportunity as risk is taken off the table and people rotate into different areas. But again, long-term views and long-term strategies should be followed. It's going to be pretty evident, especially with these ETFs, which direction we are going. And I think, again, retail has not entered the narrative. The media are still lagging. There's still tons of opportunity. I think just going through some other things that I've been watching, interestingly enough, IMX staying pretty strong, still pulling off of its highs. But as you can see, pretty much everything within the market currently is red. Um, if you're DCing, today's a great time to buy the dip and DCA in. On the NFT market, we are seeing volumes continue to rise. However, while those volumes continue to rise, we are seeing certain collections have pullbacks from their highs. Bored Ape Yacht Club and Pudgy Penguins are still within that 1 to 2 ETH range of each other. Bored Ape Yacht Club has taken back, though, that flipping position, sitting about 1 ETH higher at 21.7, leaving Pudgy Penguins at 20.6. Moonbirds have moved off of their consolidation range of the 1.6 range all the way back up to 2, and we are seeing volumes and buying from new wallets increase there. We've been tracking that and doing analytics. Sappy Seals also in that same range of increased buyers, new additions, and seeing their floor move all the way up to 1.16. This is fueled by airdrop narrative as well as again, a lot of people putting the attention on some of these older projects that have stuck around and been through the bear. We've also seen this with the Wazies. Doodles pulled all the way back from its 3.6 high back to 3. As I mentioned, we saw this exact same thing happen when it ran up to 3 originally and pulled back to 2. These consolidation zones are needed for people to make positions and for flippers to basically get out, or to allow new entrants in, as they've basically gotten attention off the run up, and it allows for these people to have a new entry space. I think also notably here, Meebits. I know we'll talk about this in a second. We had a very large autoglyph sale, $15 million, but a lot of that money, not a lot, but a decent amount of that money was put back into Meebits and Punks. I do think that there is a strong narrative for Meebits having their position, having their play. They are one of the cheaper PFP projects. I think they actually are the cheapest PFP project slash own ecosystem within the Yuga ecosystem, which makes them a very interesting value proposition bet on the other side, where we know that all these collections will be pulled into. Very, very interesting. Pixelmon also, as I said, Pixel airdrop has taken off. Pixelmon have increased in their exposure, but we are seeing a bit of a pullback there across those collections. Notably on the news surrounding crypto, we did see that this photo came out, the first one of SBF within a Brooklyn prison. This is taken back in December, but it is interesting to see his condition and where he is not based in his luxury house in the Bahamas. It's interesting. I think that we have kind of moved on from this attention span on SBF, and he's been forgotten in some sense. But I don't think that his main character syndrome is up. We will definitely see more, and there's definitely going to be more news around him at some point, but had to share that one just for the culture. It is some more positive news. Yesterday, 10 autoglyphs being purchased for 5,000 ETH, pulling in just under 14.5 million in an OTC deal. I've heard, again, mixed narratives when you see this stuff happen, but we do see on chain that the money was transferred as well as the assets. This is a full complete 10 set, which has probably one of the hardest sets to make within all NFTs. This values and puts a lot of people questioning whether 500 per is basically justified for an autoglyph. I think it is for a full set when you actually look at the range of things and the rarity and what this means. To have a full set of these, definitely demanding a premium. But it also speaks to where money at the highest level and how fine art collectors and large whales and very wealthy individuals are looking and putting their attention, and the thesis behind that, which is where you should be looking right now, which is generative art alone is definitely going to have its moment within the art collector space, but the provenance and where that art sits in the history of NFTs is very important. Autoglyphs definitely have that original and that provenance within the history books for generative art, as well as being on chain. Now, I think that we are going to see some resurgence within the generative art space, but I do think that the generative art that is fully on chain is going to have a larger moment as that narrative and as that importance is placed on these pieces into basically setting them apart from just a image living on a server with an NFT basically just pointing towards that file, where these do live fully on chain and have a little bit more of a technology over, it's leveraged on top of just being a digital piece. It's actually using the technology that we're also fascinated by. Keep that on your radar. I think another thing to keep on your radar, good friend G Money launching his new line through 9DCC. Keep this on your radar. I think that they are going to be doing some very cool stuff. I actually love the collection. Whoever G worked with to design this and come up with all the textures, with all of the designs, the patterns, as well as the cutouts, did a phenomenal job. This is stuff that I would wear. This is not the only piece. If that's not your style, they have many more. I love the leather jacket that they came out with, and their marketing campaign has been amazing. And the new all black hats are definitely a must cop. This is essentially high fashion meets technology meets blockchain. Definitely keep on your radar. Not telling you to go you have to change to high fashion, but if you are looking for something that is extremely high quality and is supporting somebody in our industry, this is where to look. Notice something very interesting. Ataru is always putting out interesting takes and has been pretty much 100% on for calling out any issue, not only within the stablecoin, but within the centralized exchange, decentralized exchange, Ponzi-nomics, etc. So when he tweets something out, I usually pay attention. An account you should probably be following. It does look like there is a bit of an interesting thing playing out on the USDT side. Justin Sun, as well as Binance, are showing some interesting stuff on chain. I would keep this on your radar. It has, for me, a long time been an area of concern. I know there's been a lot of videos made on USDT and how they are backed, etc. But when I start to see anybody speaking about this stuff, it does raise some red alarms for me. For me personally, I've got all my stables in USDC and USD because those definitely have a healthier backing on the stablecoin side. Would check these out and make sure that if you are in USDT, you feel safe and secure holding your money there. I do need to follow up on a comment that was made yesterday on yesterday's Morning Mint, which is essentially going over Chromie Squiggles and the market. I think the loan market, again, is an area that you need to be paying attention to, because last cycle, what we saw was as there were opportunities within the coin market and a more liquid market, such as Ethereum and Bitcoin, people would take their NFTs and sell them to get that liquidity and then put that back into the market. And essentially what you had was rotations throughout each of these markets. The new normal that is going to emerge, and if you aren't aware, you should be very aware of this and be looking to either farm or engage with these loan platforms, as their airdrops and their tokens are going to be very lucrative as this becomes a norm. Is instead of me taking my Pudgy Penguin and selling it for the 20 ETH that I could get right now, and then throwing that into let's just say Pixel. I want to bet on Pixel, and then getting that exposure without losing my asset. I can take that asset to Gandhi. I can take it to MetaStreet. I can take it to NFTFi, wherever. But I can take that asset and get a loan against it, put it in escrow. I can get 30 to 50% LTV, pay for 10 to 30 APR on it, and then basically, without losing an asset, deploy capital back into the market and get exposure. What we've seen here is that the Chromie Squiggles market, the LTV for a lot of these is in underwater territory, which means that the value of the asset that the loan was taken out on is less than the originating loan. So all of these debt pieces for 7.6 that you're seeing that were taken out a year ago or 8 months ago are now underwater, where the floor, I think, is like 6.5 on Chromie Squiggles. So it makes sense to not repay your loan because you're paying a 1 ETH premium to the floor. The big thing to note here is that a lot of these loans originated from SquiggleDAO, which is the largest holder of Squiggles and also well-funded. And in this point made by Cyrus, which is basically, even though a lot of these loans are going to be underwater and we are expecting some serious liquidations, in my case that I made yesterday, which is all these will basically fuel a snowball effect of putting sell pressure on the floor as well as some dumping on the floor, sending it lower, putting more people into liquidation, and putting LTVs higher and higher over the 100% range. I do think it means a lot that Squiggle is the one that is the lender on these, which essentially turns into them either getting that APR on those loans or acquiring that Squiggle for originally what they put that loan out for. I think that this will play out pretty solidly. It takes a little bit of my concern off the Squiggle market, but it does show how while there is a lot of opportunity and you can make a lot of money and basically be very opportunistic on the loan market with NFTs, there is an issue where if that floor does pull back, you can have situations like this. Luckily, this situation is within one of the largest lenders and collectors of Squiggles, so we don't expect to see as much happening there. DC Investor also putting out another point here that I think is important to understand about where money is being deployed. I think Ethereum layer 2s, in agreement with him, are going to see an incredible surge in demand as well as incredible surge in use case and utility. These are going to include everything from Blast, which I've talked a ton about on the show, to Arbitrum, and many more that we probably have even heard of that are going to launch after the show is recorded. And it's why you need to keep eyes on everything that is happening, because obviously this space is changing so much. But I am expecting, as more things are done on chain, as we see more use cases and more money flowing into Ethereum, as more people are trying to use these different services, whether it's a deck or it's, futures, perp, spot, Gamblify, Socialfy, etc., they will flood into layer 2s. Obviously, base being one that we're keeping eyes on as well, on top of everything else. But you need to be paying attention to layer 2s, especially on top of the majors, as they are going to have incredible use cases here. And with that said, obviously, we'll talk in a second here more about Blast, but it's time to not be a maxi. It's time not to just be like, hey, no, I think Blast is number one, and that's the only thing I'm going to look at. Every time you hear a layer 2 that's mentioned, you got to be open-minded and go look at it. Another interesting thing that I just wanted to bring up this morning, which is Reach. I have noticed this as an advisor of Reach be very interesting, and the price is starting to reflect that, which is we're seeing Reach be used more and more and more on SocialFi. And it's something that if you are trying to do marketing for a project, if you are trying to work within a community, if you are trying to get exposure on a tweet, this as a alternative to Twitter's native ad spend campaign tool is much better and is much more targeted and direct at our community. I personally am falling more and more in love with the product, and it has definitely made an impact on getting and helping push out certain content that I've worked with. But I do think when you start to look at the tokenomics, there is a very valid case for a supply crunch on the burn side. As more and more people use it, and as the demand spikes, we will see more of that supply getting spent, and that does mean price increase. So it should be on your radar. I have purchased a decent amount. Like I said, full disclosure, I own a bag and I am advising them and helping them talk to more communities. I think the number one bull case here is also as they onboard to more and more communities, their intra-community tool, which allows, different smaller communities to get exposure into larger communities and basically have this network effect, is going to be used more and more. And as I talk to a lot of marketing agencies within this space, we are seeing this basically be worked into every marketing tool and marketing campaign that we're seeing. So again, you want to bet on the bull market and where money is going to be spent and how it's going to be used. This is an area that you should be looking at. On top of areas that you should be looking, I'm going to say this every show, and at some point people are going to get annoyed and tell me to stop talking about Blast, but I'm not. You can't bully me. I'm going to keep doing it. I've bridged a large percentage of my wealth into Blast at this point, and I'm actively looking for Blast venture deals. Um, at some point I'll have to disclose those if once those are finished and figured out. But if you aren't looking at Blast, I'm of the opinion at this point that we are going to see deposits start to ramp up as we near the end of the bridging cycle. But I also think that we are going to see money stick around here more and more. Um, we did have a competition that was announced for all the companies that were building on Blast called the Blast or Big Blast competition. That was moved back from announcements today to announcements on Friday. That should be a sticky note on your desk. That should be a calendar. That should be, write it on your hand. Friday is a very important day to keep an eye on. I would also say that you should be paying attention to the Blast account. I say this every show, but there's so much expected value from this because of how they're going to do the airdrop to the teams that are doing this and how the teams are going to utilize that airdrop. They're not going to just take their Blast tokens and be like, thanks, Blast, we did well, and whatever. They're going to use those tokens that they're getting to basically incentivize people to stake or stay around or interact with their product or refer their product, whatever it might be. And you can say some of those strategies work or don't work, but I cannot tell you enough after talking to more and more teams how important it is going to be to not fade Blast and not fade the companies that are building on Blast, but establishing and looking and doing the research to figure out what those top 10 to 15 companies are and projects are, and interacting with them. I probably should just do a full either morning mint or a full like offline video on all of the Blast projects that I'm looking at and I think are going to be successful, and just highlight those so that and give you like my bull thesis on them. But this should be on your radar. We are seeing deposits start to increase. The interesting side of this is a lot more USDC has been coming in, and I think that is based on the disparity between how much on the ETH side versus USDC side has come in. And it's also notable that the USDC or the USD value that has come in, at least on the top like 100 wallets, is like cumulatively, I think, around like 250 million, which is kind of crazy to put that number out there. But there are like 136 wallets that have bridged over at this point. 193,000 total users over. And also the telling thing here is for the total number of transactions. It's actually super interesting that I saw the stat this morning, which was of all the users, most people have transferred once. And this total transaction side is kind of telling of, okay, how many people have transacted over once in ETH and then once in USDC. And then when you start to think about who has transacted once and they sent over like 10 ETH originally, and now have they like sent over that second transaction, I am expecting this total users and total transaction number to grow vastly. And that'll be telling of whether or not we are seeing more onboarding of new users or users that had conviction already or have put money in, have additional conviction or making a larger play. And obviously, as the lockup time shortens towards the unlock period, we will see more people put in just so that they don't feel like they've cramped up money for too long, but they still want some exposure. Another June analytics chart that is worth looking at this morning, which is the ETF side. Also, quick shout out to Philly GM, sir. Thank you for watching. Send a chat. Love to see you. ETF side has continued to heat up, more inflow. And again, I will say this every show is stop fading the ETFs. Obviously, there's a pretty strong narrative on the timeline already about this, but the inflow of buys has not stopped. Grayscale has started selling a little bit more, but doesn't concern me because the buys from everybody else, BlackRock, Fidelity, 21 shares. Who else do we have in here? I mean, these are pretty serious numbers. And so as these inflows continue to move, we are going to see and obviously know that retail is going to be shilled this harder and harder. We're essentially in before the market is in. If you start to really think about it, the charts here also are pretty evident. Which one am I looking for? Of how much share is being bought up. This one's pretty solid. As the ETF launched, obviously more and more Bitcoin was purchased up on the ETF side. The two big ones being Fidelity and BlackRock. But we aren't expected to keep seeing this disparity between Grayscale and the rest shrink. And we are seeing that the buys, as I think more people internally on the traditional finance side are figuring out their own strategies and how they compete against each other for the product side, we are going to see, I think, buys start to ramp up more and more. And if we do see a pullback on Bitcoin, I expect these buys to really ramp up as a lot of this traditional finance see this as a dollar cost averaging opportunity, as well as a buy the dip opportunity for their bags. As always, you need to understand risk reward profiles when you are investing in the market. Bitcoin, because of the ETF, and Ethereum, because of its upcoming ETF approval, have a different risk reward profile than many other things out there. And we are seeing a lot of people make bets in the altcoin markets and the gaming markets. And you, like I said, you need to come up with these investments and have the confidence via your own thesis or agreeing with somebody else's thesis where you technically are using that as research to back your own opinion. You can't just hear what I say here or hear what somebody else says and use that as gospel and be like, okay, well, he said Bitcoin, so I'm going to go buy it. And then the second it pulls back, you're like, oh, fuck it, like I'm out. I do think that you need to go, and if you're looking at buying Bitcoin, strategize on this. The other thing I will say about Bitcoin is, and I use the boomers as a signal here, is within the last 24 hours, I have heard from 3-4 different boomer families that I know of in person who have texted me and told me they have started buying Bitcoin. While this is not like they're not buying hundreds of millions of dollars like we see